When you're talking about a month-to-month line of credit, when a resident has the ability to push their payment, how many times are they defaulting and how long is it going to take before that catches up with the company? From the logistics standpoints of where that financial backing is, they do have a lot of financial backing, some very good partners.
If you're a residential real estate agent earning $200,000 a year and you want to grow your passive income, this show's for you. Learn the secrets other agents use and hear from experts in our field in order to guide you along your journey to investing in assets like apartment communities so that you can turn your commissions into cash flow. I'm Randall DeCleared. Let's go, baby. All right, here we go again. Welcome back. It's great to have you on. I am pumped because some news just came out. We are in the top 5% of podcasts globally. So thank you for listening. Thank you guys for reviewing, rating the show. It's been a journey. It's been a process, and I couldn't do it without you. So thank you so much. I also want to thank all the guests who've been coming on the show because the value that they add and the content that we're able to create is really what makes the show work. I know you're getting a lot out of it, and it's great to see that there's actual value being created through the show and the conversations that we're having. So I want to get that out of the way. Today's show is going to be a little bit unique and different because I brought on Vance Exstrom. He is the National Sales Director for Rent Dynamics. Very cool. They're a PropTech, so a property technology company. They have a CRM that's based around multifamily companies. And they also have another program that's really, really cool. That's called the Rent Plus program. It's geared toward tenants and residents in multifamily communities and how they can help them create a better credit score and all kinds of benefits that they get, plus the operators get. So we talk about that a bit, and it's a fascinating thing that I wanted to just bring on as an operator. It helps increase the net operating income of a property. And so just again, seeing that type of product is available for guys like me was fascinating. So I wanted to share it with you guys as well. And Vance is just a really cool guy. We start talking about surfing, we talk about some other things, and then stay tuned to the end because at the end, he shares some gold nuggets. If you're a parent, it's how he got started or how his parents taught him really how to get going at a very young age. So I was asking some questions about that as well. So it's a really good episode. Stay tuned. Again, if you could go and give us a rating review wherever you listen to podcasts, hugely beneficial. We're trying to get into the top 1%. And with your help, I know we can do it. So stay tuned. And without further ado, let's bring on Vance. Let's go. Vance, awesome to have you on the show today. Thanks for joining me. I am looking forward to diving into this conversation about your past, what you've been working on, and Rent Dynamics. If you would just kind of tell me a little bit about yourself and how you got started in the real estate space, where you are now.
Yeah, man. First off, thanks for having me on, Randall. Appreciate it. It's an honor to be on it. I've listened to a number of your episodes, and it's an honor to be a part of it. Real estate's been my life since I started my professional career. And even before that, I've been super interested in real estate since I went to college out in Hawaii. I've been kind of seeking this passive income state.
I didn't know where. Yeah, I saw Hawaii and BYU. And so I thought you may be living in Hawaii now. So where are you now? Where are you located?
I'm San Diego, so Oceanside, California, very northern tip.
So you've had some terrible places to live in the last few years. It's like,
yeah, I mean, I've been blessed. Let's just say that.
Yeah. Did you surf when you were out there?
I've been surfing since I was a little one, since I was 8 years old. My dad's been paddling me out in waves. So that's always a key decision maker for me.
Yeah, it's good to have that. I lived in Australia for 3 years and surfed all the time. Now I'm in Texas. It's like, got to find like a wave pool or some, oil tanker to go out or something. I think that's like the only way. But yeah, we do surfing behind boats now on the water. So
hey man, as long as you're in the water, right?
Yeah, for sure. But yeah, San Diego is a beautiful place. So is why you were doing the commercial brokerage side of it. And what asset class were you focused on?
So I did multifamily and everything from retail to multifamily.
Right on. And were you doing that in Hawaii or San Diego when you got back?
I actually did that in LA. I did it in Encino for about a year and a half. And then I actually went up to LA with a company called James Capital Advisors, which broke off from Marks and Millichap. How
long have you been doing the PropTech? Can you tell me a little bit about the company and like what it does?
I've been PropTech for a number of years now, jumped around a couple of different companies, some more startup-y than others. It's been interesting just to see different organizations and how they make decisions, especially in the current economic cycle that we're in, how each company decides to react to that. It's really, really interesting. I've been in PropTech for some time now. It's getting close to about 5-6 years. Obviously before that in the brokerage space, but Rent Dynamics specifically, what we do is we allow residents to better prepare themselves financially and from a credit standpoint, really put themselves in a better position for long-term success. When you're talking about financial literacy, when you're talking about financial responsibility, everything surrounding that, allowing residents to build their credit, not through just the normal credit trade lines that you think about, right? Like the credit cards, everything surrounding, bad debt. We wanted to kind of lift that burden off residents that are trying to get out of that. But what we do is we actually allow residents to build their credit with on-time rent payments and report that to all three bureaus, that residents have the ability to build their quicker. We also back report, right? So if for the last 24 months you've been paying rent on time, we have the ability to come right in and make a huge impact on your credit score. It's a really, really awesome tool. And then we obviously have a number of layered different financial tools, like I'm sure you heard of mint.com. We have a very apples to apples program with Mint that gives residents the ability to budget, prepare themselves financially so that they're not overextending themselves. Additionally, we also have the ability to give residents $1 million worth of fraud protection, very similar to like what LifeLock does. We kind of layer in all of these financial tools to make residents really prepared for their next step, especially where I live. You got California, where really there's nowhere else you can go. Everyone's pretty priced out when you're talking about like the millennial Gen Zs of the world that are trying to buy real estate, whether it be there's an investment portfolio or whether it be their first home. It's just been very difficult for a lot of residents to get ahead. And this is a way for them to do that.
I was on the site, I was taking a look at it. To me, it looked more geared toward property management and that side where it's CRM, where you're building the platform for the resident to get through like lease up. But I didn't know that. That's like a service for the residents themselves. So is the ultimate goal to get them to be able to qualify for a property that they can own, that they can purchase?
Yeah, we actually partnered with another company called TAP. It's another layer that we've built onto our service. It's the Advantage program. It's the acronym TAP. And what that is we partnered with real estate agencies in cross-country mortgage to partner current residents at these apartment buildings to prepare them once they've gotten their credit in the right place, once they have the finances to be able to provide. We actually discount their closing costs with that real estate agent and with that cross-country mortgage agent as well, so that they can save about $2,100 on closing costs. And then we pass some of that on to our partners, whether it be the ownership group or with the property management company.
Yeah. Wow. That was the next question. Like, what's the incentive for, I guess, an operator, like a multifamily operator, to actually have them price themselves or get themselves out of the renter pool?
Right.
And so is that the main drive? It's like, hey, once they're going to move on, or like, what are the stats around that? Like, you guys are going to have so many people moving out regardless. So why not get paid for it?
You're thinking about that the exact right way. When a resident decides they want to buy a home, they're going to buy a home whether you're helping or not. And being a part of that journey and also part of the revenue that's supported surrounding that is obviously kind of a no-brainer at that point. So we've seen a lot of success surrounded really trying to help people once they've decided they want to buy a home, being a part of that journey, right?
Yeah.
And obviously, property management companies, ownership groups, they're always looking for stories to tell.
Yeah.
And a story that they can definitely take back to their clients. But to go off to your other point too, CRM is something that we do for a lot of our clients as well. We really top of the line CRM that allows a lot of our property management companies and ownership groups to really align themselves so that, especially in the current economic cycle, which we're kind of anticipating, leasing is going to be a lot more important here in the near future. CRM, contact center, something that obviously is a huge lift from a sales perspective on a leasing team.
Yeah. Would you say this is geared more toward tenants in apartments, or would it work for somebody who has a large portfolio of single family houses as well?
Yeah. So single family is something we're digging into as we speak. So you're top of mind. But yes, I think across the board, to answer your question.
Yeah. Because obviously people listening, they're residential and multifamily and that sort of thing is majority of people listening.
Right.
Like if you have a large portfolio or something like that, you can help your tenants get out. That would definitely be really good story, and the optics on that are fantastic. Right. Helping tenants become homeowners. What's your catchphrase? What is it?
Exactly right. So we're really good at making catchphrases. Let's just say that, right?
There you go. Right on. What are you doing? Like, what's your main role there? PropTech, I'll get to that. But in general, I like PropTech. A lot of the different things that pique my interest are startups and the startup space, and like how to make the whole experience better through technology, whether it's on the operator side, the tenant side, or whatever. So I like the space and I like what you're doing. I'm just kind of curious, what do you do specifically with the company?
Yeah, so me specifically, I'm director of national sales. I work everything from the Gray Stars of the world to the 10,000 unit operators, 10,000 unit ownership groups across the US. Yeah, I'm really involved in the space and making sure that clients get everything that they need, whether it be property management company, whether it be an ownership group. We've been able to go down top. I think to answer your question though, in the PropTech space, it's interesting to see the B2B2C relationship and how successful that's been. Being that I've had some interesting experiences from the payment processing side to then on the fintech side of PropTech, and then now being, a traditional PropTech company, it's been cool to see. Typically with the startups in this space, it's a lot of fundraise and spend the fundraise and do things relatively flashy, do things relatively explosive. It's been rewarding to see how Rent Dynamics has done this in a very responsible way. We've been busy for about 10 years. So
yeah,
pre-series day still.
Got through the flashy stage. Now you guys are operating.
I don't know if we ever hit the flashy stage, but we've raised capital in a very responsible way, done it through, I don't know if you're familiar out in Utah, Wasatch and Bridge Property Management Group. And they're our early investors, and Conservice is one of our partners, all Logan-based companies. Like I said, very slow, responsible growth, which I think is so lost in today's ecosystem, especially in the tech space.
Yeah. I was on the site and I saw a lot of the Lincoln company, a lot of the property management, and then the Bridge. I was in a group with one of the original founders, I guess, of Bridge, and they just went public, or at least an arm of theirs just went public. Yep. The son is in a coaching group that I was in, and I got to see that whole process go through. And I was on the site and I was like, oh man, you guys doing, yeah. So is the main customer those larger companies, or do you guys go direct to consumer where you're saying, and you guys are marketing for the tenants in those places? What's the path to getting a single tenant signed up to your program?
Getting a single tenant, we're typically going, like I said, B2B2C, right? Yeah. So going from property management group down to the actual client, which is the resident, right?
Yeah.
And this is part of our short-term goal, is to see how we can go from B2B2C to B2C. Great question. We're trying to figure out a way to make that scalable. I think that's the issue. When you're talking about a B2C company, marketing spend goes up, but you just have to kind of see the scalability of that.
Yeah. Maybe this is technical. I don't know. I like to get into the basic. I've got a 150 unit complex, right? Or a community. Yeah. And I say, okay, I really want my residents to have this thing. What does that look like? I reach out to Vance. I'm like, hey, Vance, hook me up. Let's make it happen.
Right. Yeah. No.
Okay.
It's exactly what you do. Reach out to me. What's so rewarding about this program, Rent Plus, is it really allows residents to see value very quickly. We don't obviously want to force any resident to use this, so it's an optional service. We're seeing typically 80 to 90% of residents utilize the program.
Yeah.
It's a very high adoption product. We're giving revenue back to the client, but we're trying to make sure that this is something that is beneficial from every single aspect. It's not just beneficial for us and the resident, but also for the property management company or the ownership group.
Yeah. How do you guys monetize that? How are you guys is it coming from the resident that signs up and they pay you guys direct, or is it from the operator?
It's all through the operator, right? The property management software that they're using, whether it be Yardi, all the big ones, Yardi, RealPage, AppFolio is one we just got live. It's all done electronically and in the back end. So it's really simple for the residents to sign up, and then really simple to bill as well.
Got it. Yeah. I just didn't know if it was direct, again, the consumer was going to end up bearing the cost, or if it was going to the operator.
It is the consumer that's bearing the cost. I just want to make sure that's
got it. So then the operator, it's a definite value add to the operator then. It's not going direct to reducing their NOI.
Right.
You got it. I was looking at a few things in there, again, on the site, and it was something along the lines of, this is a way to increase your NOI. Is it through those rev sharing deals on the back end?
Exactly. So we give a portion of that to the client. And obviously it's different for every client. Some clients don't want to utilize that. And that's something additional that I really love about Rent Dynamics is every client's different. So an operator that has 150 units on one property is going to have a different ecosystem that somebody has 30,000 units throughout the US that's got several different properties involved, right? You could have the affordable component. You could have different legislation that doesn't allow you to bill in a certain way. So it's very I think, rare in this industry to have a flexible company that says, we're willing to partner with you because we want this to be your product, not ours.
Yeah, that's great. Yeah, you can really craft it to what they're looking for. Is there a threshold? I heard you say 10,000 units. So we really are best suited for large operators who have 10,000 plus doors?
No, I think this operates everything from a 150 unit person who just has one property to someone who's 179,000 units like Lincoln. So it really kind of just depends on who you're talking to, but it's very translatable.
I would imagine that you have some fairly decent data on rents and things that are happening out in the world in the space right now. Anything sticking out top of mind right now? Anything that data, just interesting data points?
Yes, I love this stuff. I think something that we're hearing on a day-to-day basis is floating rate debt. Everyone's getting hammered on these crazy interest rate hikes, which is to be expected in an economy like this, but people are getting hit hard there. When you're talking about an NOI lift, you get 80% of residents using a certain service that's getting adoption numbers like that, and you're getting several dollars per unit. When you're talking about 30,000 units, that's not a small number. But it's even on a 150 unit property, you're making $30 per unit per year. It's substantial.
Yeah. So it's 30 direct to, that's a good thing to put in the underwrite.
Yeah. It's like, definitely a good thing to put in the underwrite. Analysts love us. Asset managers.
It's not $5 for Windows screens. It's $30. Is there a buy-in cost, a setup fee and all of that good stuff?
No, we waive all of that. We just want to have good partners. We want people to buy in as much as we are. We've turned down certain clients just because we're like, we don't want to work with you. It's going to be more spend on our end for us to actually make this partnership work. We have all set up just to make sure that we have a good client.
Yeah. Wow, that's solid. That's one data point, I guess. Again, seeing the back end of, I don't know if you guys get all the Yardi and all that sort of rent data because you guys are plugged into this sort of thing, but are you noticing any kind of rent declines? Are you seeing still solid increase throughout the country, or what are you guys seeing?
I mean, obviously it's different in different markets. I would say in my geographical location, we're seeing some rent halts in regards to rises. We're not seeing a ton of rent flattening, I guess is the best term for that, right? And so we're seeing the most often rent flattening. And then if we are seeing increases or decreases, I'd say it's a little bit of a slight increase still. We're still not on the decrease side of things. I'd say, yeah. So majority flat, some small increase.
Yeah. Do you guys have a highly condensed geographical area that you guys have the majority of your clients in, like Southeast or anything?
No, we're in all 50 states, except actually, I should say Alaska, I'm still working on. Alaska is the last frontier, so to speak.
Yeah.
And it's funny, our CRO, he's from Alaska. So we were always like, okay, we need to get that going. So, but yeah, no, we operate in all 50 states.
Yeah. Have his friends and family sign up.
Yeah, right.
Where can we take this? Go ahead. You look like you have something you want to say.
No, I'm curious. Like when you're talking about an investor, right? You're talking about somebody that's trying to build cash flow. I mean, you talk to everyone around the industry. So I'm curious, like from your end, like how does this look in comparison to other NOI lifts in the industry?
Again, when I'm looking at the different things you can do to an individual property, I take this is exactly where I'm going. How can I be more competitive to win more deals? When I'm underwriting, just like everybody else is underwriting, same debt everybody else can get, where can you be competitive? And this is a very competitive thing where you can just add it on. It's a huge benefit to your community base, your tenants who actually pay for the property, and it provides a huge value to them. When I compare that to increasing the amount I can get back in RUBS or CAMs, and again, adding solar screens or whatever those minor things are, yeah, you can make money on those things. The RUBS is not minor, obviously. It's not minor, but to me, it seems like a no-brainer, I would say. Right. I haven't dug into it myself, but to be able to get 30 per door, if that's the number, then that's solid. To just be able to plug it in and just use that as an increase in your NOI. Did I answer your question there?
Yeah, no, I think you're right. Totally. I think it's like nickels turn into dollars, turn into thousands.
And so, yeah, again, how it came about, I don't know how Rent Dynamics came about, but the idea that you're providing a service for the tenants, I don't know, that's unique. It's really interesting how you are framing that to where you guys are helping them eventually phase out of the apartments. And even if they don't get out of the apartments, then their credit is going to increase and go up. Maybe they can afford a nicer apartment or something like that as well.
Right.
Again, I'm curious how it looks in California compared to Texas, right? Just seems like such a difficult market in California to afford almost any houses out there. It's like it's providing a service to them, right? They're solid, but how many of them transition out? Like, do you guys have?
Right. In California too, it's like a different stipulation, right? You got people that are trying to go lease a Maserati versus actually go buy a home. So it's, getting them to have the ability to go lease a Maserati, right? And that's increasing their credit. It's just different strokes for different states, I guess, is the best way to say that. Texas, you're going to have people that are going to have a way better opportunity to go buy a home. out in the boondocks in Texas versus in Laguna Point, California.
I want to see the marketing piece. Like, you too could lease a Maserati. It's like,
yeah, right. That would be fantastic. I need to start working on that one.
Sales. Yeah. Well, okay. You're working on that side of things. What was the other stuff that you worked on? You said you were doing a financial business fintech deal. What was that? How did that tie into real estate?
I used to work I don't know if you saw, but I used to work at a company called Flex.
No, I didn't see that.
Okay. What Flex does, it's like, are you familiar with Affirm or Afterpay? I'm sure you are.
Yeah.
They basically do the same thing, but for multifamily. They allow residents to break up their rent into 2 pieces throughout the month.
That's it. It's not like they're going on some long-term pay plan or something for.
No, yeah. It's a month line of credit, basically.
Yeah. Again, curious how those things get paid because like one of the big things that concerns me is consumer debt currently.
Right.
And the Affirms of the world, buy now, pay later, like a massive layaway basically is what it is, but get it today, pay later. It has increased the amount of like consumer debt that we have just in general. From a property owner's point of view and a landlord's point of view, obviously I want to make sure that they're able to pay their rent on time. And so that is why it's front of mind for anyone listening.
Right.
That's why.
Right.
Yeah. I'd be curious, on that side of things, was there a reason that you got out of that business or did you enjoy it? Like, what was that like?
No, I did enjoy it. I think fintech provides, from me personally, like a lot of benefit, right? I learned a lot in a short amount of time. I think some of your same hesitations were some of the things that I worried about on a day-to-day basis. There was so much debt being facilitated in that time period. The last 2 years from COVID, we saw interest rates be at a historic low, and there's so much debt out there. When you're talking about a month-to-month line of credit, when a resident has the ability to really, at the end of the day, push their payment, how many times are they defaulting and how long is it going to take before that catches up with the company? I don't know. From the logistics standpoints of where that financial backing is, I know they do have a lot of financial backing, some very good partners from the VC side. So I'm not quite sure how the logistics go out, but I had the same hesitations you did.
We're proud to be sponsored by Ridgeline Investment Group. Ridgeline has a track record of transacting more than $53 million in assets throughout Texas. Ridgeline is currently looking to acquire 100 to 200 unit Class B multifamily communities between 5 and 20 million in San Antonio, Temple, Waco, Tyler, and other Texas secondary markets. To learn more about Ridgeline Investment Group, visit www.ridgelineig.com. That to me though, having owned so many properties and having so many tenants, that to me seems like a pretty solid model. I don't know how you make money on that if it's a zero interest deal. Like how do you make any money? I didn't get that with a firm on, like maybe they're getting paid from the.
You use a firm?
I used a firm one time I think it was to buy Peloton. I was like, I got no payments forever. All right, this sounds great or whatever.
Yeah, right.
No interest forever. And so
how much was a firm? I've never used a firm or Afterpay. I can't remember. Is it like a $20 thing or?
I didn't pay anything. It didn't cost me anything. I paid for it most likely in the purchase price. But even then I said, what is it for cash? It was like $2,500 for a Peloton or whatever it was. How much is it with the firm? $2,500 broken up. And so where I'm paying for it, I have no idea. That's why I'm like, how do you guys make any money in that business?
That's interesting.
And so I'm assuming.
Did you do that through Amazon or who'd you do that through?
I don't know at the time.
Because if I'm remembering correctly, I think they did have, I can't remember if it's a firm or Afterpay, but one of them has a deal with Amazon. And I think Amazon's picking up like part of their shipping costs or part of their fees that they're passing on to their clients. They're sharing with a firm or sharing with Afterpay.
Yeah.
So maybe that's how they're funding it. I'm sure there's some with a lot of these partners that you see like on our website, you go buy a pair of pants somewhere and there's a firm, there's some deal that they've been able to strike with that.
That makes sense. I may have gone direct. Honestly, I don't remember at the time.
It sounds like that's probably what's going on because no one's doing this for free.
Yeah. That's why, again, if the rent is $800 a month, they're paying 4 and 4.
Right.
Operators got to be paying for that, I would assume.
So, we do have some operators that say, I want all my residents to have the ability to pay their rent on time, right? And they'll just cover the cost, right? But then we have some clients that want to pass that to the resident. They just don't get as many residents utilizing the product.
Yeah, interesting.
I think it was like $20 when I was there. $20 if a resident wants to sign up every month to push their payment or break it up in half. To Flex's credit, they have a lot of really awesome stories, right? You have clients that you've worked with residents that really have difficult times paying the rent, whether they be in the service industry and are working on tips or whatever it might be, right? They are helping people out. So,
for sure. That's why, again, that service, what I was owning properties and having tenants, but a lot of times it'd come to me, they're on a every 2-week paycheck, right? Pay you want to get paid. That would be a huge benefit.
Totally.
Then sliding their payment whenever it's due, but they're paying Flex. Flex is paying you guys up front, or they're paying the operator up front. And that gives consistent cash flows to the operator. Yeah, I see the benefit there.
Exactly. There is benefit. I think I have the same hesitations you do, though, with all the debt and it to be paid and who's picking up that bill.
Yeah. You guys have, as a company now, and with the line of sight to all the major operators that you guys are working with, are you seeing a pause, I guess, in transaction volume? Have you guys just been powering through? Like, what's it look like on your front?
Yeah. So short answer is yes. I think acquisitions this year are going to be very slow. I have a number of contacts in the commercial real estate space, obviously from a brokerage standpoint as well. And all I hear from brokers right now and lenders is that things are going to be, people are bracing themselves. I think with interest rates, that obviously halts things as well. And not only is it just the economic cycle, but when debt isn't cheap, it's tough to make deals happen in some cases. You're obviously seeing the big guys still float around acquisitions and dispositions, but it's the same thing in our economy as a whole, right? Who runs our economy? It's the small businesses. The small operators, small ownership groups, they're holding off for the time being. The big guys are still doing the same. The Blackstones of the world are still doing what they need to do. I think you'll see that happen at least for the next year, and we'll kind of see where this next year goes. SVB was a wake-up call for a lot of people as well, right?
I was going to ask you about that, like VC funded world, like how did that impact you guys? Did it, or you guys?
I mean, not us personally. I know there's some tech companies in the PropTech space that have been affected pretty heavily, but us personally, no. Like I said, we're a very responsible company that's put our money where we need to put it in a very responsible and conservative way. I think client-wise, we saw some clients that ran through Zenefits and couldn't send out benefits to their clients because a lot of payroll companies were invested with SVB, and that was held off for a while. I think when you're talking about from a priority standpoint, what a lot of these clients are seeing right now is we got our ducks in a row when we talk about how much we have invested at each bank, because SVB was like a cap of like $250K. You could have an account or something like that, or else you'd have lost.
That's every account. Every FDIC insured account is maxed at $250,000.
Right.
So a lot of the talk has been raise it $2.5-3 million. Is that realistic?
Right.
250 minimum set.
Yeah. So I had a lot of clients that, it's some clients that were affected because they had more than FDIC regulated amount of $250K. If you're smart, you only invest from a property level on an LLC basis. Every property has their own entity so that you never really go over that threshold. And then you break it out if it ever gets over that 250 amount. Yeah. Some clients are more responsible than others. Yeah, we've definitely seen kind of a trickle-down effect, not only from the tech side, but also from the client level.
I think in general, though, asking a depositor to go and be able to read the balance sheet of a bank to make sure that they're investing in the right things is a little bit unrealistic, especially if the regulators themselves did not catch this in advance of it happening. So it's like, I don't know. It's to split out maybe $1 million in deposits over 4 banks, maybe is something. But you're talking about like VC backed startups that were pulling their money, it's millions of dollars in these accounts to make payroll. It's just not realistic. Either increase the threshold. So anyway, we can talk about that another time. What I'm curious about though, is if you in your company have had any like communications about second or third order effects of like this banking debacle that's happening right now, like the SVB's signature and all that.
Yeah, I think we've discussed this from an economic layout where we're at today. I think it's pretty basic economy 101. Like you're going to have your peaks and valleys. We anticipate from our end and from everything that we've heard. We pretty plugged into the multifamily industry and also the financial districts. So it's everything that we're anticipating is we are going to have a downturn that may be a couple more bank runs. We're not anticipating it to be anything similar to 2008. We're bracing ourselves, so to speak, just for the change in priority, so to speak, from clients, but not necessarily from the fact that, hey, we need to change our positioning as a company, because we are pretty confident that everything from CRM to Rent Plus is economy proof. You're having residents that having more difficulties, they're going to need to get their credit up even more. You're talking about a CRM where leasing is going to be more important as the economy shifts. We're always going to have a job in this industry, and that's just something that it's pretty comforting.
Yeah, for sure. I had a conversation with a a crypto fund manager the other day about how he's positioning himself to be the picks and shovels in the crypto world. I mean, it's kind of the same thing. Like, you guys are a platform. You're in a position to where up or down, it's still needed. It's a good position to be in. Kind of curious. You've been in real estate for a bit, right? I don't know what the impetus was to get you into real estate, but do you have ambitions to, or maybe you already are, investing into properties?
Yeah, great questions. I've been investing in real estate opportunities since I was in college, actually. I did door-to-door sales that was my first job, real job. I did pest control door-to-door. You've probably seen the guys out there. Yeah. I mean, I get them at my door now, but I used to do that. And it was kind of a really interesting jumpstart to my career as a professional. Made a really good amount of money, and it was kind of my first time actually having some money. And I was like, what do I do with this? And I knew that long tail, long term, it's real estate. Real estate's how you make the real money in this world. Luckily, I had a dad that taught me young and said, hey, if you have a chunk of change, you need to park that in real estate. I am fortunate I was really good friends with the COO of Marcus and Millichap. He's no longer there, but he had some connections with some people that were able to get me involved in a fund. I've been involved with a number of different real estate deals through his company, and also with another company based out here in Laguna. I work on a couple from the real estate side. Funds that I work with, some of them are retail strip centers that I've invested in that are being repurposed or being released. Underappreciated assets that really needed to come in and revamp, right? So let's talk about the Toys R Us's of the world that, you need to get a new tenant in a Toys R Us. You need to get a new tenant in one of those really vacant large spots or repurpose it. We're seeing that a lot. I feel like in San Francisco too, people are vacating the city like crazy. A lot of this office space is just empty. They're starting to see how they can repurpose that into some multifamily, which can, revitalize the city. So
same fund that you're already in, they're going to diversify into that, or is that
one of the funds I'm invested in? PEI out of Pennsylvania. They're doing a lot of that from an office space perspective. And then another company I'm invested in that's up in Westlake, California. They do retail, whether it be releasing and revitalizing or doing construction to underappreciated assets.
What are you most excited about, I guess, asset class right now? What do you think? If the perfect fund came along with the best thesis, what would it be in your mind?
I really like the repurpose side. Have you ever been in one of those buildings where it's been like an old office space?
A buddy of mine's doing a big one here in San Antonio right now. I haven't been in one that was completely turned.
Yeah.
I'd say that, no, that's not true. There's another guy, an operator here in San Antonio that did one, and I walked it.
What were your thoughts on it?
His model was really interesting. He did micro units essentially.
Okay.
And he's crushing it. Yeah, he was the first to act. I hadn't been in the building previously, so I didn't have anything to compare it to.
Right.
But I thought his finish outs were great. But that's all I know.
Yeah, no, it's pretty much the extent of what I know too. But honestly, some of these revitalized office spaces are really, really cool. You see, they utilize space in such an interesting way. And obviously it's expensive. You're having to build out windows and having to do all these rebuilds surrounding an office space. But if you can do it right, I think that's always super intriguing to me. Taking something that's underappreciated, undervalued, and making it something that can actually serve a really valuable purpose.
Yeah. Yeah. So talking about the Toys R Us's of the world and some of the even grocers and that sort of thing, because there's in San Antonio or in Texas in general, H-E-B is one of the big operators, right, for grocery stores. And so they'll buy a new strip center, they'll develop a new one down the street from an old one. And so we see these things pop up and I'm like, man, what are people doing with these? One of the funds that I was looking at, they were going out and repurposing those into storage facilities. Very interesting type deal. And some of the old malls and that sort of thing as well, converting malls into apartment complexes and communities.
Yeah, the storage space is interesting, man. It's something that's been I feel like a boom in the real estate industry in the last couple of years. So I'm interested to see long term how that's going to play. Yeah, it's been pretty successful. I've seen a lot of people really kind of pad their pockets, so to speak, with storage space.
The entry level to buy 100 units of storage compared to a 100-unit apartment community, this doesn't even compare. You're talking maybe $1 million compared to 10 million. It's I think the barrier to entry is lower and the mechanics of ownership are a lot easier. You don't have tenants and toilets.
Which is why they're less expensive, right?
Yeah. I couldn't understand. Long ago when I started looking at storage facilities, I just could not understand how anyone ever thought of it as a business in general. I'm like, okay, so you want people to store their crap for another extended period of time. And I get it. It's great, but it just promotes this consumerism. And I don't know, like personally, I've just had this hard time getting my head wrapped around it. Sure, it makes a lot of money and I don't knock it, but I'm just like, I can't get excited about it personally for that reason.
I totally get it. Like, you're not adding value to people that, for me, it's like, I love telling stories. I love like hearing stories, people that change people's lives and add value to people's lives, because at the end of the day, that's what we are. We're human. I always say that to whether I'm managing a team or whether that's the people within my corporation. We're talking from a sales standpoint. I'm going to say, hey, look, everyone's people, man. It doesn't matter if they're a COO, doesn't matter if they're a fund manager. They're people, man. And at the end of the day, we're people trying to help people. From a storage standpoint, it's like, okay, so I'm helping people store their crap. It's like, it's not the best story, right?
Well, I don't know. If you want to tell a story, it's Storage Wars, I guess. And then you're like, yeah, look at this. Check it out. My brother got into it and he's doing well. He's been buying facilities and developing some things. And it's, again, it's hard for me to wrap my head around the promotion of buy more stuff.
Right.
Store your couch here for 40 years, throw it away, I guess, when you're done.
Yeah. And then when you die, we'll auction it off.
Yeah. But anyway, well, look, we've gone over a number of things here, Vance. Like, great catching up, learning about what you guys are working on there and how you guys are helping tenants in the space. I always like to wrap up with some questions that aren't related to work. So name, I guess, your favorite thing to do outside of business.
Surfing. It's super easy question for me. I mean, spending time with family is an obvious one, but like from a hobby standpoint, it's surfing.
Yeah.
I've been surfing since I was a kid. I'm actually going out to Hawaii this next month.
Enjoy it.
I will, man, the first 3 months of this year has been nutso for me. I actually just got back from a conference in Napa. I've been doing conferences this whole first year and traveling to clients up in Oregon, Washington. So I'm ready to get out in the water.
Yeah, nice. Are you working out there? Or are you going to be off?
Yeah, I'll be working. But yeah,
very cool. I just remember all the times going out because we lived right in Surfers Paradise in Australia. And I lived in a high rise, so I could look at the waves. Okay, great. Looks good today. Even if it didn't, I'd go out for a paddle and just
cool.
the like.
What part of Australia?
Surfers Paradise. It's in Queensland.
Oh, in Queensland. Okay. Yeah.
It's just south of Brisbane, north of Byron Bay. But you just going out, like the peaceful, calm, I'm in nature, and I get to ride waves. I love it.
How about you? What's your guilty pleasure?
Oh man, guilty pleasure. Right now, it's just family time when we can get it. Yeah, it's like.
I guess that's just a pleasure. That's not really guilty, huh?
Yeah, that's right. I've got a little 2.5-year-old and a 5.5-year-old, so spend a lot of time with them playing soccer, watching it. My son scored 6 goals this past weekend. We're like, beast mode, my man.
Let's go.
Yeah, let's go. Exactly what he likes to say. What's the best thing or memory that's happened to you or your family in the last 60 days or so?
Wow, that's a great one. Best memory in the last 60 days. It's funny. My dad actually he just got prostate cancer. I think like seeing our family come together and like come around him, that was really cool. I mean, it was something that was shocking and crazy, and he's doing great right now, by the way.
Good. Don't
feel too bad. Yeah. I think that was really cool to see how we were able to kind of come around him, embrace him and be there for him.
Yeah, for sure. The family, it's anything yet. I'd wanted you to finish, but same thing happened. My dad had prostate cancer, found out, he went and got it taken care of, luckily, and everything is good. But
did he remove his prostate?
I think they had to take part of it as ascending. I think they took part of it out or exactly, but we all went and how old are you? He had it taken out, and then me and my brother immediately went. And so we've had to, now I'm on the train of like get tested all the time.
How often do you do it?
I think if they find anything, then you have to do it every year. So I think I'm on a 5-year plan, but I'm 40. Okay. So I got tested when I was 40 or 39.
Yeah.
So it literally like just happened and he had it taken out.
I'm going to start early, I think.
Once it's like, you got to do it, man.
Yeah. And my grandpa, so my great grandpa, he died from prostate cancer. It's like skipping a generation.
Yeah.
Yeah. We'll see, man. Maybe I'll have my kid checked.
Yeah. Oh man. I think there's the test you can get, the genetic test now.
Yeah.
Maybe find out if you're predisposed for it.
So. Yeah. Who knows? Maybe ChatGPT will remove it for us, right?
Oh my God. I'll let you answer the last question with Chat. Name 1 or 2 people who have been most influential to your success or the way you think.
I would have to say there's 2 people that have been super influential for me. One being my dad. I think my dad, I had my first job when I was 9 or 10. I was umping baseball games for real small kids. I've had a job ever since, all throughout college, whether it be a really dumb job. And once I started college, actually having legit jobs that helped me shape. That's why get me, you're like, this guy could be 35 or 40.
Young buck, 18. Just
I know. And I appreciate it, man. No, you look good yourself. I think it's part of the reason why I sometimes get the whole wise beyond years thing is my dad real early was like, you got to prepare yourself for, and I think it's really because he didn't really have that figure in his life. I got to give my respect to my wife. I think her name is Jackie. Jackie's been my rock since I've met her. She provides so much in life, has to do with perspective. I felt like I was pretty one-sided before I met her. It really helped open my mind. Once you unlock that, other people have different opinions. Like, why am I not listening to them? It really unlocks an amazing part of your brain. I'd probably say those two.
big shout out to the family. That's awesome.
Yeah, man. How about you?
My wife, you're talking, it's very similar like response. I met her when I was very young in high school, and then we went our separate ways, and then we got back together. But yeah, wow. Even at a young age, just her and her whole family gave me a completely different perspective on all things, like mainly religion. I grew up in a very religious household. She's Jewish, and so I was not. Southern Baptist, like Christian family. And so just seeing that and just having that mind blowing, like, oh, wow, this isn't the only way. Like, okay,
there's other people out there. Yeah. Crazy. You know?
Yeah. So yeah, that's very similar. I wanted to ask you, brought it up again. I'm glad you said it earlier. You were talking about my dad got me into real estate at a young age.
Yeah.
As a father, what you recall your dad doing that got you either motivated to get a job or like something specific? Anybody listening to this, mom, dad, whatever, can take something away. I think that'll be a great thing to just hear your response to this. Like, I'm curious. I always ask, go ahead.
Well, you're a dad, man. That's you're thinking that way. Yeah. I think like something that stuck with me was every dollar I made, whether it be me taking out the trash when I was a kid or whether it was me, actually having a job, every dollar, my dad sat me down and said, hey, what are you going to do with this dollar? You can either go spend it or you can go actually be responsible with it. You can put it into an account. You can invest in real estate. So he had those conversations with me super early. And he gave me personal examples, right? My dad had passive income in a lot of different areas, whether it be stocks, bonds, whether it be diversifying the account. And then obviously in the real estate space, he had a number of real estate properties that he gave him passive income. I helped rehabilitate when I was a kid. I helped rehabilitate one of his properties. I think when you're talking about early on, just those little nuggets of information, it doesn't have to be like the birds and the bees sitting down your kid and telling them how to diversify their portfolio. I think it's just those little nuggets of, hey, what are you going to do with that dollar that you made? Because a lot of kids, they make a dollar and they go spend it on something stupid. And instead of them doing that, you can really kind of have them think about it.
Yeah. Do you remember what age you were when that started?
Yeah, I want to say like 9, 10. Okay. Yeah. So
like I give my 5-year-old $5 right now. It means nothing to him. He's like, I don't care. It's
like paper airplane.
Exactly. Yeah. Dad, buy me something. That's when the conversation comes. It's fun taking him to the store and actually saying, okay, how much money do you have? Pick something out. What can you afford? So that's like the early stage, but like, how can I get him to start thinking about, money as a
honestly, bringing this full circle, this will probably be a good like recap of everything. It's cool with Rent Dynamics. We provide that financial literacy part. So it's like people that have lost that, have missed the boat on it in an apartment and maybe are going from paycheck to paycheck. This is a way for them to say, look, it's a free way that I can go take courses and actually learn about budgeting, learn about financial actual responsibility, because it's just something that in our education today is just not focused on.
Yeah, I agree. I remember trying to balance checkbooks in home ec or whatever that class was. Yeah. And it's not 100% financial literacy. That's not what they're teaching. It's like
not at all.
It's not like how to
buy. We do know who Ben Franklin is though. So that's cool.
That's right. Awesome. Well, Vance, let's leave it at that, man. I appreciate you jumping on. It was a great conversation. Good getting to know you. I'm going to put a link to your contact information, if that's all right with you.
Perfect.
Show notes, just so that if people want to reach out to you.
And did you want to read there that you wanted like a headshot and what else did you need from me?
Headshot, blood sample. No, if you just have a bio and a headshot, just shoot that over and I'll forward it to my assistant. She'll make sure that's up. And whenever it's done and ready to publish, they're going to send you some stuff. So if you want to put it on social media and that sort of thing, give you artwork and some other things, the episode going on.
What contact you want, personal or work?
It's up to you, man. You tell me if you want. You just in the email, just say direct everything here.
Yeah, we'll do.
Sound good?
Awesome, man. Well, great chatting with you, Randall.
You too.
Hopefully down the line, we'll have to meet up.
Yeah. If I'm in San Diego, man, take me surfing.
Oh yeah, I'll definitely take you out.
Can't be like double overhead days or anything, but it's like, all right,
yeah, man. Sounds good.
Have a good one. Later.
Okay, bye.
Surprisingly, most of the agents we speak with got into real estate hoping to gain passive income and become work optional. However, only 1 in 5 ever start investing. Most are simply too afraid to start. Once you get educated by listening to this show, you'll be able to overcome that fear and become the 1 in 5 who are finding financial freedom. Don't miss a single episode. If you want to stay up to date, the best way is to make sure you're subscribed. So if you haven't done that, go ahead and do it now. And we'll catch you on the next episode.